In today's video, I'm going to teach you how to use TradingView effectively for day trading. If you're new to TradingView, or perhaps looking to refine your current day trading process, this guide is tailored just for you. We'll dive into setting up a workspace that not only caters to your trading needs, but also enhances your overall efficiency and effectiveness. First and foremost, crafting a clean and efficient workspace is paramount to successful day trading. Whether you're on a free account or a pro plan, the chart layout is your command center. With pro plans, you can unlock the capability to view up to 4 to 8 charts simultaneously. This multi-chart view is particularly useful for those who prefer to keep a close eye on various assets or timeframes simultaneously. An essential tip here is to link your symbols and timeframes. By doing this, any changes you make will synchronize across other charts, providing a seamless and unified analysis experience. When setting up your workspace, strive for minimal clutter. It's very easy to get carried away with a myriad of indicators and data points, but less is often more. Focus on using 2 to 3 key indicators that align with your trading strategy. Indicators like the RSI, MACD, and Supertrend are popular choices. They each have their strengths. RSI for determining overbought or oversold conditions, MACD for momentum tracking, and Supertrend for identifying trends with rapid signals. Now, let's talk about selecting the right indicators and timeframes for day trading. The key timeframes for most day traders include the 1-minute, 5-minute, and 15-minute charts. These shorter timeframes are excellent for spotting potential entries and exits with precision. However, it's also crucial to reference higher timeframes, such as the 1-hour or 4-hour charts. These provide a broader perspective on the prevailing trend and can help you make more informed decisions. Among the top indicators for day trading, the Supertrend indicator stands out. It uses the average true range, or ATR, to deliver swift trend signals, making it invaluable for quick decision-making. Combining the MACD and RSI can also provide powerful insights. The synergy between these two offers an excellent momentum checking tool, enabling rapid entries and exits. Additionally, moving averages, like the 50 EMA and 200 EMA, are staple tools for identifying longer-term trends and potential reversals. Crossovers between these moving averages often trigger action points for traders. By adhering to these guidelines, you're more likely to maintain a streamlined and efficient approach, paving the way for improved focus and potentially better trading results. Remember, practice makes perfect, so the more you familiarize yourself with TradingView's tools and capabilities, the more intuitive the process will become. So go ahead and apply these tips to transform your TradingView experience. Happy trading!